Hey, imagine an investment which is not linked to the stock market, but it is still delivering 10 to 12% return. Well, invoice discounting is one such investment opportunity. Invoice discounting enables businesses to gain instant access to cash tied up in unpaid invoices and tap into their value of sales ledger. Let's not waste any time and try to understand this with an example. ABC Plastic Limited is a small company that makes plastic wrappers for biscuits and other food items. So on one fine day, Britannia, a major FMCG company, comes to ABC Limited and says, "Hey, we need 10 lakh rupees worth of wrappers." ABC Limited is extremely happy that they got a big order from a famous company. But Britannia says, "Hey, listen, we need the wrappers right away, but you need to give us a credit period of 90 days and we'll pay back in time." But of course, ABC needs money to carry out day-to-day operational activities and pay salary of its employees. So now basically ABC has three options. One, they can refuse to give a credit period for Britannia, in which case some other company with enough cash reserves will get the order, which is not so good for the company. And the second option is to go for a loan from a bank. But in that case, they'll have to keep a collateral and pay regular interest, which might affect their profitability. And the third and final option is called as invoice discounting. So ABC Limited can now get that receipt they received from Britannia and go to an investor who will pay them 9 lakh rupees right away, which happens to be a 10% discount on the invoice price. And the investor can claim his 10 lakh rupees from Britannia at the end of 90 days. Well, invoice discounting also comes with some inherent risks. Number one, credit risk. In our example, invoice was from Britannia, a very well-known company, and we know which will honor their credit. But what if it was some random company that we have never heard about? There's a chance that the company might not pay 10 lakh rupees at the end of 90 days. Number two, disputed invoice risk. Imagine if Britannia says the wrappers that it received from ABC Plastic Limited are not made from a good quality material and they are having issues with it. In that case, Britannia might refuse to make the payment at the end of 90 days. Now that you have understood the risks that are involved in invoice discounting, let's take a look at what makes invoice discounting stand out from other investments. Number one, short-term investments. We don't have to wait till the end of the year or till the maturity like in case of MLDs, NCDs or bonds. Some invoice discounting tends to pay out in a very short period like 60 to 90 days. Number two, portfolio diversification. We can use invoice discounting to diversify our portfolio further. Since it is not linked to any stock market, it doesn't matter if Britannia falls or goes up. At the end of your credit period, you'll get your money if the company doesn't default. Well, I hope in this video you are able to learn how to invest in a short period to generate fixed returns. If this video was helpful, don't forget to like and share this with your friends.